One of Canada's largest lenders, HSBC Bank, is offering a mortgage rate below 1%. Now that is worth talking about. How's it going, guys? On December the 4th, for those of you who don't know, HSBC, which is Canada's 7th largest bank, started to advertise a mortgage rate of 0.99%. This mortgage rate is available for a 5-year variable rate, high ratio mortgage. This is an absolute first in Canadian history for a variable rate mortgage to be under 1%. And it's absolutely crazy. I'm actually shocked just by how cheap money is getting right now. If you need any more evidence as to why our housing market is on fire, you really honestly don't have to be looking very far. In today's video, I wanted to discuss this interest rate specifically, how you can qualify for it, and I wanted to break down your principal repayment with our current rates, with the rates being as low as they are today. So, how do you take advantage of this incredible promotion? Well, I'm not a mortgage broker, but what I can tell you is that this promotion is available for new mortgages with individuals that are buying a primary residence. So you must be buying a property that you intend to live in. Obviously, it's not an investment. You have to have very good credit, and you are buying with less than 20% down. That's what a high ratio mortgage is. That's what that means. It means you're buying with less than 20% down. How do you qualify for a high ratio mortgage? Well, that's a good question. The only way you can qualify for a high ratio mortgage is by having a strong income. So whether that's individual income or household income, meaning you're buying with a partner or a family member, either way, your incomes have to be strong. Should you be even getting a variable rate mortgage right now? Some of you may ask. Well, in short, absolutely. Canada's central bank has never actually been more clear with their intentions on interest rates. I've mentioned this in my previous video, but they've essentially said that they will not be raising interest rates until 2023. With this information in mind, there should be no reason and no doubt in your mind as to which rate you should be picking, fixed or variable. To me, the other biggest advantage of variable rates is flexibility. Your typical mortgage term is 5 years, and should you choose to sell early, as I have in the past, for example, if you're on a fixed mortgage rate, you will be paying an IRD penalty, an interest rate differential. This IRD penalty can be quite substantial, and in my case, I just sold a house very recently. I actually had to pay over $10,000 in IRD penalties. With a variable rate mortgage, you only pay 3 months, typically 3 months of the interest rate portion of your monthly payment as a penalty. So this is going to be substantially lower. Maybe it'll be $1,500, $2,000, $3,000. But I tell you right now, it's certainly not going to be over $10,000. Variable rate mortgages provide you what you need the most right now. And that, in my opinion, is flexibility. Canadian real estate, Toronto real estate, is extremely dynamic, and you want to be able to take advantage of the market as quickly as opportunities present themselves. And you're only going to be able to do that with a variable rate mortgage. So that's my take on it. You should definitely be going variable. Let's have a look at the mortgage payment with a rate like this. So your average mortgage payment with a rate such as this. According to CMHC, the average mortgage right now in the city of Toronto in the GTA is about $500,000, which kind of makes sense considering our average condo price is in the low 600s right now. So with this type of a mortgage and an interest rate of 0.99% and on a 25-year amortization period, your $500K mortgage will result in a payment of $1,882 per month. But it gets even better. $1,882 per month seems pretty cheap, right? Well, It gets even better. After living in a property for a year and making about 12 payments, as you can see on the graph in front of you right now, totaling $22,580, your interest paid is just $4,860. Meanwhile, principal repaid is $17,720. So this means that every single month out of your mortgage payment of $1,882, you are putting $1,470 back into your own pocket. That is what these low interest rates are allowing you to do, to pay yourself. I honestly, right now, don't see any reason why people should be renting. You could easily be paying $1,800, $2,000, $2,200 a month in a rent, where you could be pocketing, if this was your mortgage payment, you could be pocketing approximately 78% of that amount, according to my math. This is tremendous. Really, if you're renting right now, you should really rethink your strategy and get into the market while condos are still affordable. I will say that I'm not a mortgage broker. I'm a real estate broker. If you're looking for financial advice as it pertains to mortgages, I will connect you with a few of my trusted mortgage brokers, and they'll be happy to assist you, run some numbers with you, and let you know what it is that you can afford. Like, comment, and subscribe, and let me know your thoughts in the comment section. And remember, right condos is always right.